Hi, I'm Shashi,
Hi, I'm Shalin.
and today we're going to be giving you our elevator pitch for Otis Worldwide Corporation. Otis Worldwide Corporation is a global manufacturing, installation, and service company focused on elevators, escalators, and moving walkways. What's remarkable is that Otis has survived every major regime change, war, and market disruption from the 19th, 20th, and 21st centuries. Over 170 years of stability.
Otis operates on a razor blade model. They sell elevators and escalators at lower margins, but make most of their money on servicing them over decades. Revenue comes from two segments. The service segment, which is maintenance, repair, and modernization, is about $9.4 billion, or 65%. The new equipment segment, which is new elevators and escalators, is about $5 billion, or 35% of the company. In total, Otis generated $14.4 billion as of 2025. Importantly, roughly 90% of operating profit comes from service. Once an Otis elevator is installed, it creates a multi-decade maintenance relationship. Switching providers is expensive, risky, and disruptive, especially for high-rise buildings, which creates a powerful moat.
Otis operates in over 200 countries and territories. Sales break down roughly as 29% in the United States, 11% in China, 59% in the rest of the world. The global diversification reduces reliance on any single market and gives Otis resilience during regional slowdowns.
We rate Otis as a buy with a target price of $102.50, representing about 10.17% upside from the current price of $93.04. Our thesis rests on five core drivers.
The first is that elevators must be inspected regularly under safety standards like ASME and OSHA, and similar rules exist globally. This means customers have to service their elevators, and it's easiest to do that with their original manufacturer. This drives loyalty, recurring revenue, and pricing power, creating a stable profit model.
Next is modernization. Millions of elevators worldwide are aging, while safety regulations are tightening through annual and 5-year tests. Otis already controls the largest installed base, so existing customers naturally turn to Otis for upgrades. Their Otis One platform enables predictive maintenance and safety monitoring, creating a built-in growth runway without relying solely on new construction.
As the global population ages, elevator demand rises. Otis designs elevators specifically for hospitals, retirement communities, and low to mid-rise residential buildings through products like Gen 2 and Homeline. This demographic shift directly supports long-term demand for Otis products.
Otis services some of the world's most iconic buildings, including the Burj Khalifa, Eiffel Tower, and Empire State Building. With technicians already deployed worldwide, Otis offers faster response times and cheaper servicing at scale, building trust with governments and developers as urbanization accelerates in countries like India and Brazil.
Finally, Otis generates strong free cash flow, pays dividends, and buys back shares. And at today's price, Otis trades below its intrinsic values. This gives investors income, compounding, and defensive characteristics, all at a discount.
The global vertical transportation market is roughly $100 billion today and is projected to reach $200 billion by early 2030s, with a 6 to 8% compound annual growth rate. This is an oligopoly. The four top players control about 70% of the market, creating high barriers to entry and pricing power. Otis is the biggest player, controlling 18% of the market. While new equipment is cyclical, service and modernization, which make up about 57% of the market, are growing steadily, with modernization alone expanding over 7% CAGR. Otis leads the segment with approximately 2.4 million service units globally. Within the industry, Otis has competitive positioning. It operates in 200 plus countries compared to only 70 for its biggest competitor, Kone.
It already has the biggest consumer base, creating a strategic moat as there's continued buying. Its unique marketability, working with high-scale projects, painting itself as a community-based organization, and specializing elevators makes it uniquely appealing to consumers. And it has the highest level of innovation, with its LIoT being the only elevator model with a connected fleet, meaning better data tracking and analytics.
Otis earns revenue from two segments: service and new equipment. Service generates higher margins and recurring cash flow, while new equipment is more cyclical and tied to construction. What makes Otis so powerful is its razor blade model. Every elevator installation creates decades of maintenance revenue, allowing Otis to earn even during construction downturns. Now, moving on to valuation. Otis is currently undervalued relative to both its intrinsic value and competitors. This is supported by recurring cash flow, stable earnings, and industry leadership. Using relative and intrinsic valuation, Otis shows approximately 10.17% upside from its current price.
For the relative valuation, we compared Otis to Kone Corporation, Schindler Group, and TK Elevator, which operated similar service-based business models. Otis's closest competitor, Kone, is more volatile based on its P to E ratio and carries higher EBITDA despite stronger scoring.
For intrinsic value, projected 2026 earnings per share is $5 to $5.20, with a midpoint of $5.12. The industry average for the price to earnings multiple is about 20 times, which is higher than Otis. For intrinsic value equals earnings per share times the industry multiple. So $5.12 times that 20 equals $102.40, aligning closely with our $102.50 target, confirming our buy recommendation. There are several key risks. First, China dependence. China represents 50% of Otis's global new equipment market, and construction slowed with a 20% decline in new equipment sales. However, this is mitigated by growth in India and Brazil. Second, macroeconomic exposure. Otis depends on global construction, so recessions or trade disruptions could compress margins. Third, competition and pricing power from Kone, Schindler, TCAT Elevator, and independent service providers who control about 50% of service units. Otis's moat and brand mitigate this. Fourth, inflation and input costs such as labor, freight, and materials partially offset by Otis's global partnership. Finally, debt servicing may be a threat, however. Recurring service revenue, high EBITDA, and strong interest coverage make this manageable with low risk of dilution or forced asset sales.
Environmentally, Otis uses solar fields at facilities in North Carolina and Madrid, reduced CO2 emissions by 30% since 2015, and cut total energy consumption by 75%. SkyMotion reduces elevator energy by 50%. The Gen 2 switch model uses less electricity, and their Compare Plus algorithm places elevators in standby during low traffic. Their Brazil facility saves 2 million gallons of water annually through rainwater and wastewater reuse. Otis earned its ISO 14001 certification in 2021, targets net zero emissions by 2030, with 50% reduction in Scope 1 and 2 emissions.
Socially, Otis runs the Made to Move Communities program, pairing students with Otis mentors to close STEM skill gaps. They provide community grants, disaster relief funding, and employee volunteer programs like STEM Kits and Raising Little Engineers. Otis also leads in accessibility, developing elevators for hospitals and elderly communities, including Homeline and Gen 2.
From a governance standpoint, Otis has a majority independent board, with directors holding about 0.23% of company stock, preventing short-termism and maintaining stability. A one-share, one-vote structure also allows shareholders to have a place in their decision-making. Extensive ethics training and Otis absolutes of safety, ethics, and quality also are key to their governance. They diversify suppliers, enforce a supplier code of conduct, and maintain strong cybersecurity. They also provide a confidential reporting system so that all employees can remain safe.
Otis has been led since 2017 by Judith F. Marks, formerly CEO of Siemens USA. She stayed through the spin-off from Otis from United Technologies, launched Otis One, and transformed Otis into a smart elevator company. She emphasized the geopolitical and macroeconomic readiness. Otis employs 72,000 people globally with a 17-member executive team spanning America through Asia Pacific. Major shareholders include Vanguard at 12.5%, BlackRock at 8.2%, and AllianceBernstein at 4.3%, and State Street at 4.1%.
AI improves Otis through smart dispatching systems that learn traffic patterns in real time and historically reduce wait times and energy use. Their IoT analytics via Otis One enable predictive maintenance by tracking vibrations, preventing breakdowns before they occur. Otis also uses remote monitoring, AI-powered elevator media in Europe and Africa, and digital portals that provide tailored service recommendations, making an elevator ride more entertaining. AI also enhances safety, customer experience, and profitability for Otis, benefiting Otis' strategy overall, especially by expanding high-margin service revenue.
Overall, Otis combines undervaluation, recurring cash flows, and strong ESG, discipline management, and AI-driven modernization, making a compelling long-term buy.
Thank you.